As the market shifts from overhyped growth stocks to undervalued treasures, Qualcomm Incorporated stands out for savvy investors. With a 21-year record of dividend increases, a strong 2.57% yield, and a forward PE of just 11.71, Qualcomm combines stability with impressive growth. Coming off a record $11.7 billion quarter, fueled by soaring demand in smartphones, automotive tech, and IoT, this tech leader thrives in uncertain times. From enabling VR headsets to next-gen vehicles, Qualcomm's diversified dominance and robust cash flows make it a must-own dividend stock. Here's why QCOM could be your smartest investment yet. Today's episode, Resilience. Please support our sponsor. They provide valuable information for you and me. If you enjoy this newsletter, please consider sharing it with your friends and business contacts by clicking the button below. Share the newsletter, don't miss out on future gains. Unlock the secrets to effortless investing with our smart portfolios. For a limited time, grab our fast track to build a winning portfolio blueprint at a 50% discount. Here's what's waiting for you. Step-by-step guide. Start investing in minutes with our chosen online broker expert. Insights. Uncover the strategies behind our recommended smart portfolios. Easy diversification. Gain exposure to a wide range of assets with just a few clicks. Long-term growth potential. Build a portfolio for consistent returns over time. Start building your winning portfolio. Today, get the blueprint to build a winning portfolio today. Today, you can get the list of stocks from Cybertech Portfolio for free. Free Cybertech Stocks Portfolio. Paying the bills. Our newsletter is powered by Beehive, which partners with trustworthy and high-quality advertisers. When you click, not only do you have the opportunity to benefit from the ads, but you also help support our efforts to improve our newsletter for you as our readers or listeners. Please support our partners. Refined. Brain food is delivered daily. Every day we analyze thousands of articles and send you only the best, tailored to your interests. Loved by 562 curious minds. Subscribe. Dividend strength in a value market. Why Qualcomm could be your smartest move. Yet a shift is happening. Are you ready for it? Right now, the investment world is whispering a different kind of opportunity, and it's not the high-flying tech growth stories that have been dominating headlines. It's the return of value. The S&P Value Index, home to sturdy sectors like banking, consumer staples, and healthcare, is down about 9% year-to-date, but that's a lighter fall compared to the 15% plummet of the more glamorous growth-focused indices. What does that mean for an investor like you? The expectations tied to value stocks are far lower, and when expectations are modest, the potential for upside surprises gets larger. As the economy wrestles with inflation pressures, global tensions, and tariff headwinds, value companies, especially those paying reliable dividends, are quietly building momentum. This market moment is rare. Over the past 2 decades, growth has overwhelmingly outpaced value. But history suggests that when the tides turn, those paying attention at the right time reap outsized rewards. If you're overwhelmed by market noise, this clarity matters. You're not chasing hype here. You're identifying underpriced strength. And there's one name standing out sharply: Qualcomm Incorporated, NASDAQ, QCOM. Qualcomm's strength you can see and trust. Qualcomm isn't a flashy newcomer desperate for attention. It's a 21-year veteran of steady dividend growth, a reliable profit machine with a forward PE ratio sitting attractively at 11.71, in a market where inflated tech valuations have been the norm. This is not just about mobile chips anymore either. In its latest fiscal first quarter of 2025, Qualcomm posted record-breaking revenue of $11.7 billion, marking the third consecutive quarter of double-digit top-line growth. This isn't by accident. The company's diversified business units have each become profit engines in their own right. Smartphone chip sales, up 13% year-over-year to $7.6 billion, driven by a rebound in global handset demand. Automotive technology, an absolute breakout, soaring 61% to $961 million, fueled by next-gen vehicle demand for smarter, safer systems. Internet of Things, IoT, grew by 36% to $1.5 billion, tapping into the unstoppable expansion of connected devices everywhere. You want a company that's future-proof? Qualcomm is already inside the next generation of cars, homes, and industrial devices. The company's Snapdragon XR2 chipset powers cutting-edge virtual reality training programs like Axon's VR system, reinforcing its role not just in mobile, but in tomorrow's most critical technology sectors. The dividend power you need now. Dividends often get overlooked during bull runs, but when volatility strikes, dividends are what keep portfolios healthy and growing. Qualcomm shines here. It pays a quarterly dividend of 0.89 per share, which as of April 22nd represents a yield of 2.57%, an attractive figure when the S&P 500's yield struggles to break 1.5%. The real story isn't just the dividend itself, it's the reliability behind it. Qualcomm finished the quarter with more than $3.1 billion in cash and cash equivalents, generated nearly $4.6 billion in operating cash flow, and still had room to return $942 million to shareholders through dividends alone. A 21-year history of consistent dividend raises speaks to the company's discipline and hints at even more growth ahead. In a world where economic uncertainty could pressure earnings elsewhere, that consistency could be one of the most powerful defensive tools in your investment arsenal. The bigger picture, value is not a fad. This time historically, value stock revivals have been short-lived. But this time, the backdrop looks different. For years, aggressive investors crowded into growth stocks, betting heavily on AI and innovation without questioning the skyrocketing valuations. But now the economy is navigating through the reality of higher interest rates, unpredictable global trade dynamics, and slower global growth. The perfect conditions for value investing to thrive. Michael O'Rourke, a respected strategist at Jones Trading, noted that growth stocks have become 40% more expensive than value names. That disparity wasn't built on fundamentals. It was built on optimism, and optimism can be fragile. Qualcomm fits perfectly into this value resurgence because it offers a rare combination: growth where it matters, cash flow when you need it, and dividends that reward your patience. You're not just buying into a recovery play, you're buying enduring strength. And this time, with value expectations set low and realistic, the path forward could be smoother and more rewarding than many realize. The bottom line for you markets are full of noise, shiny headlines about meteoric gains and overnight fortunes. But investors who last and thrive build positions based on strength, not speculation. Qualcomm presents that strength right now. A dominant, diversified business model. Massive cash flows supporting healthy and growing dividends. A low valuation that leaves room for upside without the need for perfect conditions. Resilient exposure to critical future trends. Automotive tech, VR, IoT, and beyond. If you're busy, if you're overwhelmed by choices, if you're tired of chasing, here's clarity. Qualcomm is offering you not just a stock, but a solution. A way to compound your wealth quietly, steadily, through any market cycle. The only question is, will you make this smart, patient move now, or let another opportunity pass by unseen? Want more investing tips? We're here to guide you through every step of your investing journey. We can also help you build a winning portfolio in just 10 minutes. We will provide a step-by-step guide to effortless investing in the stock market on autopilot. Copy the portfolio and grow your wealth. Get our free portfolio by joining our newsletter. You can also get regular updates, tips, and exclusive content on making the most of your investments and building lasting wealth. Subscribe now to receive more investing tips. Thank you for reading, and remember, investing today is the key to your financial freedom today and tomorrow. Let's build wealth one step at a time. Are you new here? Subscribe now to receive more investing and stock trading insights. That's it for this episode. Thank you so much for reading today's email. Your support is the only way I can write this email for free daily. Kindly give us feedback in the poll below and share the newsletter with other investors if you find it valuable. Disclaimer: this newsletter is for informational purposes only and should not be considered financial advice. Please consult with a financial advisor before making any investment decisions.